Everyone, welcome to EduTap and welcome to Finance 360-degree session. So today we are going to discuss two important articles of the Reserve Bank of India. The first one is the notification that the RBI has recently released regarding the reporting instructions for the authorized dealer category 1 banks, and there are the timelines that have been provided. There are certain important facts that you have to remember from the phase 1 as well as from the phase 2 perspective. The next article that we are going to discuss is the recently released press release of the Reserve Bank of India, where the RBI has informed that the mission Saksham has been launched. Okay, so we will discuss both of these news articles and the RBI articles basically in today's session. First of all, give me a thumbs up if I'm clearly audible and the screen is clearly visible. And good morning, everyone. Good morning, Kashish. Good morning, everyone. So I hope I'm clearly audible and the screen is also visible. Okay. So let's get started with the first article. But before that, first do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session. Okay. Now, before starting with this article, one important announcement is that I hope you know that today at 6 p.m. we will be having the RBI EduTap live session for the March 2026. Okay, so the RBI EduTap of March 2026 will be taken today 6 p.m. This will be a live session and this will also be released on YouTube at the same time. So this is the session that you are getting on YouTube. I will suggest you to take the benefit and to see that how the things will be covered in the course. Okay, so the session this session is the course, the crash course session, the live practice session that is for the RBI EduTap. Okay. Now, let's get started. So today 6 p.m. do join everyone. If you want to cover the RBI EduTap of March 2026 in the live session, so do join. Now, let's start with today's session. The RBI has issued the directions on reporting instructions for the authorized dealer category 1 banks. So I hope you know that the authorized dealer category 1 banks, so authorized dealer banks, they are basically the banks that are allowed, that are authorized by the Reserve Bank of India to undertake the exchange or to buy and sell the foreign exchange. Okay, so authorized dealer category 1 banks, they are the banks that are authorized by the Reserve Bank of India to buy and sell the foreign exchange. Okay, for the different purposes, for the current account transactions, like for the trade in goods, for the trade in services, for the transfer payments, for the remittances and such, the authorized dealer category 1 banks, they can buy and sell the foreign exchange, as well as for the capital account transactions, that is for the investment purposes, for the borrowing purposes, the authorized dealer category 1 bank, they can exchange or they can buy and sell the foreign exchange. Okay, so for the current account transactions, trade in goods, trade in services, transfer payment, for the capital account transactions, that is for the investments, the borrowing and the lending that we are doing with the other countries. So for all these different purposes, the authorized dealer category 1 bank, they are allowed to buy and sell the foreign exchange. Okay, so these are the authorized dealer category 1 banks. So there are certain instructions that have been released for these category of banks. Okay, now previously what used to happen, that as per the master action risk management and interbank dealings that was released in 2016, that has been amended from time to time, in terms of which authorized dealer category 1 banks, they are required to report all the over the counter foreign exchange derivative contracts and foreign currency interest rate derivative contracts. So basically the authorized dealer category 1 banks, they had to report all the over the counter foreign exchange derivative contracts and the foreign currency interest rate derivative contracts. So first of all, what are the derivatives? What are the derivatives? Derivatives are such financial contracts. They are the financial contracts that derive their value from some underlying asset. This underlying asset can be the shares, the value of the shares, or it can be the interest rate in rupees, or it can be the interest rate of the foreign currency, or the underlying asset can be the commodities, or it can be foreign exchange, foreign currency. Okay, the value of the foreign currency. Okay, like $1 equal to 83 rupees or $1 equal to $100 rupees. So basically the derivatives, they are the financial contracts that derive their value from some underlying asset, the value of the shares or the interest in rupees or the interest of the foreign currency, the commodities value or the foreign currency value. So these are the derivatives. Derivatives are of different kind. The forwards, swaps, options and futures are there, right? There are different kind of 4 types of derivatives basically. Now the forward contracts, these are the contracts that are traded over the counter. That means these forward contracts, they are not traded on the stock exchanges. They are not traded on the stock exchanges because the forward contracts, they are usually the customized contracts as per the need of the people that are trading in the forward contracts. Okay, so let's say I'm signing a forward contract. I am a exporter and I know that after I am a importer, let's say, and I want to import some machines after 1 month. Now I'm afraid that what if the value of dollars increase and I have to pay more rupees to get $1 to purchase these machines that I want to purchase from USA. So what I will do, that I will come into a forward contract, that after 1 month, that is on 30th of May, I need $1,000 and I will purchase $1 at 83 rupees. So that I have fixed the price, fixed the value. So even if like after 1 month on 30th of May something happens and the value of dollars is $1 equal to 100 rupees, but I will only have to pay how much? I will have to pay 83 rupees. So this is this is used for hedging to reduce your risk, as well as for speculative purposes also this is used. But basically for the hedging, for reducing your risk, you can use these kind of forward contracts and they are customized. You can decide the date on which you want to purchase the dollars. You can decide the value, okay, on which you want to purchase the dollars and such, and whoever is the seller, if they want to sell, they can sell. So this is the basic idea. I hope this is very much clear. So I hope this is clear. Okay, these are the kind of forward contracts. So see, over the counter, now we have discussed that over the counter contracts are basically over the counter derivative contracts. They means a derivative other than those which are traded on the recognized stock exchanges. So in the recognized stock exchanges, the futures are being traded. The futures are being traded, okay? Futures and options. You must have heard about the FNO section in the IND Money, in the different apps that you are using for trade. In the different app, there is the section of FNO in which many of the people trade. Okay, and SEBI has also said that the retail investors, they should not invest in the future and option market because this particular section is very volatile, as well as big traders, they usually trade in this segment, and retail investors, most of the retail investors, they make the losses. So SEBI has again and again talked about the FNO because the futures and options, they come under the stock exchanges. Okay, so OTC derivative transactions or basically means a derivative other than those which are traded on the stock exchanges, on the recognized stock exchanges. So over the counter transactions, derivative transactions, these are the transactions that are not happening on the stock exchanges. They usually happen through the electronic trading platforms on the personal basis. The transactions or the contracts are happening. So now I hope you have understood the basic idea that the authorized dealer category 1 banks, previously they were required to report all their over the counter derivative foreign exchange derivative contracts in which they were trading the foreign exchange, as well as foreign currency interest rate derivative contracts. So these had to be reported. These had to be reported to the trade repository of the CCIL, Clearing Corporation of India Limited, as well as the authorized dealer category 1 banks. They also has overseas entities, that is overseas subsidiary, like the State Bank of India, Punjab National Bank has various branches in other countries or subsidiaries in the other countries. Okay, so basically the State Bank of India, Punjab National Bank, the branches that it has in the other countries, for that also the reporting had to happen of the over the counter foreign exchange derivative contract or foreign currency interest rate derivative contract. So this is the basic idea. Okay, if you have understood this, then this whole article will become easier for you to understand that the authorized dealer category 1 banks, they are required to report all the over the counter derivative contracts in the foreign currency undertaken by them directly by the bank itself or through their overseas entities, through their overseas branches to the trade repository. They have to report trade repository of the CCIL. As well as what happens that as per the rupee interest rate derivative directions 2025, in terms of which market makers, now what are market makers? Market makers are basically the entities or the authorized people that maintains the liquidity in the market. Okay, let's say you want to sell your securities, but there is no buyer. So that means liquidity is not there. You are not able to sell your security. Let's say you want to buy the security. You want to buy some shares or something, but there is no, or you want to buy the derivatives, but there is no seller. So there is no liquidity in the market. To resolve this kind of problem, there are the market makers. The market makers, they keep on quoting the prices for the buy and sell so that liquidity is maintained in the market. And if someone wants to sell the derivatives, the market makers can buy the derivatives. If someone wants to buy the derivatives, the market makers can sell the derivatives. So basically market makers maintain liquidity in the economy, in the financial segment. So as per the rupee interest rate derivative directions 2025, in terms of which market makers in the rupee interest rate derivative market. So market makers, they are maintaining the liquidity in the rupee interest rate derivative market. They are required to report all the over the counter rupee interest rate derivative transactions undertaken by them directly or through their overseas entities, as well as all rupee interest rate derivative transactions that are undertaken globally by their related parties to the trade repository of CCIL. Now here is a difference that I hope you have noticed, that authorized dealer category 1 banks, if they are undertaking the over the counter foreign exchange derivative contract or foreign currency interest rate derivative contract, they have to report such transactions to the trade repository of the CCIL if the transaction has been undertaken by them directly or by their overseas entity. But in the case of the market makers, as per the recent direction that was released in 2025, market makers in the rupee interest rate derivative contract market, they have to report the over the counter derivative contracts, that is the interest rate derivative, rupee interest rate derivative contracts. They have to report all such derivative contracts that they have undertaken themselves, by them only, by their overseas entity, as well as by the related party. So related party, we will discuss that what are the related parties. But even the related parties, even if they are undertaking these interest rate derivative contracts in rupees, even then these transactions also had to be reported to the trade repository of CCIL. Okay, so globally, even if the related parties are undertaking these transactions, that also have to be reported by the market makers for the trade repository of the CCIL. Now this particular related party wala clause was not available for the authorized dealer category 1. So authorized dealer category 1 banks, they did not have to report the transactions, the derivative transactions over the counter by their related parties. Got it? Any confusion here first of all? Do you understand the difference? Market makers, they had to report the transactions undertaken by the related parties globally, but the authorized dealer category 1 did not have to report the derivative transactions undertaken by the related parties. Okay, any confusion first of all? So now what is the change that has come? Recently the RBI has issued these directions. So under these reporting instructions for the authorized dealer category 1 banks, it has been clearly laid down that on a review it has been decided that the authorized dealer category 1 bank, they shall also report all the over the counter foreign exchange derivative contracts involving the Indian rupee undertaken globally by its related party to the trade repository of CCIL. So basically, authorized dealer category 1 banks, before they were reporting over the counter foreign exchange derivative contracts and the foreign currency interest rate derivative contracts that were undertaken, these transactions that were undertaken by them or by their overseas entity, by their branches overseas. Now it has been said that they also have to report the foreign exchange derivative contracts that is involving the rupee if these transactions are undertaken by the related parties. This has also to be reported by the authorized dealer category 1 bank, and where the reporting should happen, to the trade repository of the CCIL. That is the idea. Okay. So on a review, it has been decided that the authorized dealer category 1 bank, they shall report all the over the counter foreign exchange derivative contracts involving the rupee undertaken globally by its related parties to the trade repository of CCIL. Now, what are the related parties? So first of all, as per the direction or instruction, the related party shall have the same meaning as assigned to it under the Indian Accounting Standard Related Party Disclosures or International Accounting Standard 24 Related Party Disclosures or any other equivalent accounting standard, provided that the term related party shall exclude the associates. So related party actually means what? So as per the Indian Accounting Standard, the related party disclosures, the related party means a person who has control, like we are talking about the related party, like authorized dealer category 1 bank. For this particular bank, the related party is any person who has control over the bank, or any person that has joint control over the authorized dealer category 1 bank, or any person, any shareholder that has significant influence over the authorized dealer category 1 bank. They are the related parties, as well as key management or managerial personnel like the CEO or the board members and such. They are also the related parties of the authorized dealer category 1 bank. So a person, these persons that directly have the control or joint control or significant influence, these persons as well as the close family members of these person, like the spouse or the children of these person, they also are considered the related parties of this authorized dealer category 1 bank. So means authorized dealer category 1 bank will have to report all the foreign exchange OTC derivative contracts that are signed by these related parties. These also have to be reported by the authorized dealer category 1 bank to the trade repository of the CCIL. As well as, other than these person, the entity can also be a related party to this bank if the entity is related to this authorized dealer category 1 bank. They belong to the same group. Let's say the Kotak Mahindra group is the parent of the Kotak Mahindra bank. Okay, so for this parent entity as well as for the other entities that are related to the Kotak Mahindra bank, like the subsidiary as well as the joint ventures and such, okay, like the State Bank of India, it is a authorized dealer category 1 bank. There is it is the parent bank. There is also State Bank of India Life Insurance. There is also State Bank of India Card and Payment Services entity. Okay, so these are the related parties of the State Bank of India because they belong to the same group. So if the entity belong to the same group, the parent, subsidiary, fellow subsidiary is related to the others. Okay, then also the authorized dealer category 1 bank has to report such kind of transactions that are undertaken by the related parties. Both entities, they are joint venture. Let's say both the entities, the Kotak Mahindra Bank and the Kotak Life Insurance or Kotak Securities, they both are the joint ventures of, or they are the subsidiaries of the parent Kotak Mahindra Bank. So the fellow subsidiaries, so for Kotak Mahindra Bank, the related party is the parent as well as the fellow subsidiary, as well as, let's say, XYZ is the joint venture of ABC, and the 123 Bank, that is the category authorized dealer category 1 bank, this is also the joint venture of ABC and some other entity. Okay, so the joint ventures of the third party, both entities are joint ventures of the same third party, then also the other entity will be considered the related party of the bank. Okay, or if the entity, let's say the entity is controlled or jointly controlled by the key management personnel of the bank. So let's say there is an entity that is controlled by the same key management personnel that are controlling the bank, that are controlling the authorized dealer category 1 bank, then also this entity will become the related party of the bank. So you can understand that the authorized dealer category 1 banks, they have to report so many of the transactions of the related parties, and there are so many of the related parties that a bank can have. For all these related parties, that can be a person or the close member of that person or any entity that is the related party, the authorized dealer category 1 bank have to report all the over-the-counter foreign exchange derivative contracts involving the Indian rupee undertaken globally by its related parties to the trade repository of CCIL. This is the idea. Now, there are some timelines, there are some facts that you have to keep in mind. The authorized dealer category 1 bank has done additional financial contract with another bank, with another authorized dealer category 1 bank. Okay, so this is the idea that the client, the authorized dealer category 1 bank has done a contract that the authorized dealer category 1 bank A will sell $100 to the client at a particular rate, and authorized dealer category 1 bank has done another contract that it will buy $100 on this specified date at this rate. So basically it has covered its position. It is not at risk because it is selling the dollars, at the same time it will be buying the dollars at the future date. Okay, so it has no open position. So this is considered the back-to-back arrangement, that the bank is covering its position by coming into the simultaneous contracts. So an authorized dealer category 1 bank will not be required to report transactions that is undertaken in terms of the back-to-back arrangement and transactions that is undertaken by the related parties with other authorized dealer category 1 banks in India. Because if the related party, let's say the person that has control over this authorized dealer category 1 bank A, it is this related person or this related entity, this person is coming into the contract with another authorized dealer category 1 bank. So this other authorized dealer category 1 bank, it will report the transaction because this bank is a part of the transaction, so it will report the transaction directly. So the authorized dealer category 1 BA bank will not have to report it separately. So basically this is a bank A, it has a related party, that is a person, let's say, that is the key managerial person in the bank A. Now this person is having a contract with the bank B. Now this bank B has to report the transaction because this is a part of the transaction. So this bank B has to report the transaction to the trade repository of the CCIL. So already the transaction has been reported. So in this case, the bank A does not have to report the transaction of the related party. That is the basic idea. So authorized dealer category 1 banks, they are not required to report the transactions in which the back-to-back arrangement has happened. That means they have covered their position by simultaneously doing the contracts, so that they have covered the position, and transactions that is undertaken by the related party with other authorized dealer category 1 bank in India. So these kind of transactions, they are not to be reported to the trade repository of CCIL by the bank A under the existing instructions. That is the idea. Okay. Next, any confusion in this point? Any confusion? So back-to-back transaction, back-to-back arrangements and the transactions undertaken by the related parties with other authorized dealer category 1 banks in India will not have to be reported by the authorized dealer category 1 bank whose related party it is. Now, an authorized dealer category 1 bank shall have the option of not reporting the transactions where the notional value of the contract, does not exceed $1 million or the equivalent in any other currency. Okay, so this is the idea that the authorized dealer category 1 bank, they have the option to not report the transactions where the notional value of the contract does not exceed $1 million or the equivalent value in the other currency. Okay. Next is authorized dealer category 1 bank shall ensure that with effect from 1st July 2027, all foreign exchange derivative contracts that is involving the rupees undertaken by its parent, including the branches of the parent, are reported by it. That means Kotak Mahindra Bank, that is a bank that is, let's say, authorized dealer category 1 bank. it has a parent, Kotak Mahindra Group. Okay, this is the parent. So basically, if the parent or the branches of the parent, if they are undertaking the foreign exchange derivative contracts over the counter, so all these kind of contracts, they have to be reported to the trade repository of the CCIL with effect from July 1, 2027. With effect from July 1, 2027. With effect from July 1, 2027, the transactions reported by the authorized dealer category 1 bank constitute 70%. So from the same date, with effect from July 1, 2027, at least 70% of the notional value of all foreign exchange derivative contracts involving INR that are undertaken by the related parties other than the parent, the other related parties that are the key managerial person or the other person having the control or other entities. So other key related parties, if they are undertaking the foreign exchange derivative contracts, so 70% of the value of the transactions have to be reported with effect from July 1, 2027. That is the idea. Okay. So for the parent and the branches of the parent, from July 1, 2027, 100% of the contracts notional value have to be reported. But for the related parties, because there are so many of the related parties, so there is the timeline that is provided, phased path that is provided, that is with effect from July 1, 2027, transactions reported by the authorized dealer category 1 bank constitute at least 70% of the notional value of the contracts undertaken by the related parties. With effect from January 1, 2028, 80% of the notional value of the contracts have to be reported, and with effect from July 1, 2028, that is within 1 year, we can say all the foreign exchange derivative contracts undertaken by the related parties have to be reported. So basically, there are two categories. The contracts that are undertaken by the parent and its branches, they have to be reported 100% with effect from July 1, 2027. Now, if there are other related parties, if the contracts are undertaken by the other related parties, that is not the parent, in this case, there is a phased path that is provided. With effect from July 1, 2027, 70% of the contract value has to be reported that are undertaken by the related parties. And January 1, 2028, 80% of the notional value of the contracts have to be reported, and with effect from within 1 year from July 1, 2028, the 100% of the notional value has to be reported. Any confusion? No? Okay. Reporting shall be in terms of the following. So, authorized dealer category 1 bank shall report all the important elements of the transactions of the contract, like the notional value, the name of the counterparty. Let's say the related party is coming into the contract. So, which is the other party? That is a part of the contract. Okay, so the notional value of the contract, the name of the counterparty, that is the other party in the contract, maturity date, currency specifications, in which currency the transaction is happening, INR is involved, but what is the other currency that is involved? Okay, as applicable to the transaction. So authorized dealer category 1 bank shall report all elements of the transaction which are relevant to provide meaningful information. The central counterparty. Now there are certain transactions, let's say the related parties or the authorized dealer category 1 banks. The related parties, they are doing the transaction through the anonymous trading platform. So they are coming into a contract through the anonymous trading platform. In this case, the counterparty is not, the related party is not aware about the counterparty. The bank is not aware about the counterparty because it is an anonymous trading platform. We do not know that who is selling the contract or who is buying, who is the counterparty. We are not aware about it. So if the related party, it is coming into a contract with through the anonymous trading platform, so the counterparty, what is the other party? That is, let's say related party is buying the contract, so the other party is selling the contract. We do not know who the seller is. In this case, while the reporting is happening, the central counterparty is basically the intermediary that is coming in between the buyer and seller. So the buyer is the related party, the seller is the anonymous person. So the central counterparty is the intermediary that is basically acting as a seller for the buyer and buyer for the seller, and it is going to handle the transaction between the two entities. So if you are not aware about the counterparty, the other party, then the central counterparty may be reported as the counterparty. Only in cases where the transactions are happening through the anonymous trading platform. In this case, the transaction is cleared through the central counterparty, and that's why the central counterparty can be named as the counterparty. Okay. Yes. Moving forward. Next is the reporting formats shall be as indicated by the CCIL, because you have to report to the trade repository of the CCIL. So the CCIL will inform the reporting format. Transaction shall be reported preferably on the date of the transaction, but in any case within 2 working days from the date of the transaction, not later than that. Okay. So this is it. This is the whole article that we have discussed. We have discussed about the reporting, the timeline for the reporting, the phase timeline that is provided for the related parties and such. Now, coming to the next article, that is on April 28, 2026, the RBI has launched Mission Saksham. Okay. Any confusion, anyone in the previous article? This we have completed. So for all, so basically, remember that on a review, it has been decided that the authorized dealer category 1 bank shall report all the OTC foreign exchange derivative contracts involving the Indian rupee undertaken globally by its related parties to the trade repository of CCIL. Okay, so for all the over-the-counter foreign exchange derivative contracts, this is the system that has been brought. Remember this. This is the main idea. The rest is just the data that you have to remember. Now, coming to the Mission Saksham, RBI launches Mission Saksham. Saksham is Sehkari Bank Shamta Nirman for capacity building of the urban cooperative banking sector. Okay, so Reserve Bank of India, it has announced, I think in February only the announcement was made about the Mission Saksham, that the Mission Saksham will be launched. Now in April the Mission Saksham has at last been launched, so it becomes very, very important because just before your examination this has been finally launched. So first of all, full form SA for Sehkari Sakshamta. Saksham for Sakshamta. Okay, so the Reserve Bank of India has been taking various steps, various regulatory and supervisory measures to support the urban cooperative banks. Now the Mission Saksham, this is a mission mode sector wide all India capacity building training initiative for the urban cooperative banks. So under the Mission Saksham, training programs, in-person training programs as well as e-learning courses would be conducted for the urban cooperative banks, covering about 1.40 lakh participants, and these training programs will be for the board members also, senior management, heads of the risk, compliance, audit functions, employees working in IT function and other critical areas. So the different levels of the authority will, or the different level of the employees, they will be included in the training program, in the training programs. Okay, the Reserve Bank shall endeavor to conduct these training programs with content delivery in the regional languages to the extent that is feasible and possible, and the mission has been designed in consultation with the umbrella organization of the UCBs and the National State Cooperative Federation. Now the mission is expected. What is the outcome that is expected from the mission? So the outcome is to enhance the managerial and operational capabilities, improve the compliance culture and strengthen the institutional resilience across the urban cooperative banks. So to improve the managerial and the operational capability, improve the compliance culture so it can comply with the rules and regulations of the Reserve Bank of India, and strengthen the institutional resilience across urban cooperative banks against the distress. Mission Saksham, the aim of the Mission Saksham is to establish a sustainable, self-reinforcing ecosystem for continuous learning, contributing significantly to systemic stability of the urban cooperative banks, healthy growth and development of the urban cooperative banks. This is it. So this is it for today. Now this is the first question. I hope you will be easily able to answer this question. Consider the following statements regarding reporting of OTC foreign exchange derivative contracts involving INR to the trade repository of the CCIL, and in this regards which of the following statements is or are correct that you have to inform. So which of the statements given above is or are correct. So do try to inform. do try to give the right answer of the first question. The second question is that as per reporting instructions for authorized reader category 1 banks with effect from July 1, 2027, transactions reported by such bank constitute at least what % of the notional value of all foreign exchange derivative contracts involving INR undertaken by its related parties over the counter other than the parent. For the parent, it would be 100% from July 1, 2027, but for the other related parties, what percentage of the notional value has to be informed? That you have to tell. Now, this was the question that was given as the homework question in the last session. So, in regards to the creditor initiated insolvency resolution process, the first and third statements were correct. The second was wrong. Many of you have given the correct answer. So, the creditor initiated insolvency resolution process, it should be concluded within 150 days, correct. Adjudicating authority can approve the extension of time by 45 days. By 45 days, not 90 days, by 45 days. Okay, that's why second was wrong. In the case of the creditor initiated insolvency resolution process, the management of the corporate can keep the managerial responsibility, but under the regulation or under the supervision of the resolution professional. So third is also correct. So 1 and 3 was the answer. Okay. Second homework questions that I have given today. We will discuss it in the next session now, and do try to answer these questions. Now, this is it. Thank you everyone. Thank you for joining. Any confusion, anyone? Do give the right answer of the homework question in the comment section below. So thank you everyone. This is it for the session. Thank you for joining. See you in the next session now. And today at 6 p.m. do join the session. Okay, so today at 6 p.m. do join the session so that you are able to revise the whole month of March that is provided in the RBI News tab in the course. So this will be live on YouTube. This will be live on YouTube also. This is a demo